Hello everybody, this is Toni Turner and welcome to the Market Now as of about noon Eastern on Friday, October 27th. And hey, it's almost Halloween. Gains in technology stocks powered by strong earnings from Microsoft, Amazon, and Alphabet lifted the NASDAQ and the S&P 500 so far today, but losses in Chevron and Merck have kept the Dow in check. Microsoft advanced 6.20% after the world's largest software company reported further gains from its cloud computing services. Amazon jumped 8.26% this morning, and Google parent Alphabet gained 4.26% after results. The gains drove the S&P Technology Index up about 2% so far today. The sector has gained about 30% this year, which is double the gains in the broader S&P 500 index. And on that cheerful news, we will go on to look at three charts that could give us some insight into the week to come. Now, first of all, we're going to look at a daily chart, as we always do, of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was trading at $256.84. That's about $25.68 on the S&P 500 itself. It made a new all-time intraday high, October 23rd, of $257.51. Now that's this red candle you see here, and we're going to talk about that more in just a moment. Of course, so far today, and hopefully for the rest of the day, the SPY is trading above its red line, the 20-day moving average, the green line, the 50-day moving average, and the black line, the 200-day moving average. Of course, we expect all of these moving averages to provide potential support should the SPY decide it needs to move lower. Now, what I want to show you here is kind of important. I said we'd talk about this red candle right here that was October 23rd, and that was on Monday. Now, last Friday, a week ago, the SPY gapped up. You can see where it gapped up. Now, it did fill that gap, but it didn't fill it on the S&P 500. So it gapped up, and then the next day it had this big red candle, which what we call an outside day or a bearish engulfing day, meaning that it opened at its highs, closed at its lows, and when it did so, at what at least so far is the top of this move, it engulfed the price pattern of the day directly prior to it. Now that is generally a sign of weakness when you add it to the fact that on the 14-day RSI I'm pointing to down here, at that time the RSI was overbought. That means it was trading above this top line here, which is the 70 line. Whenever the RSI, the Relative Strength Index, moves up and above the 70 line on its scale, it means that whatever asset you're looking at is overbought or too many people own it. And it needs, once it gets over that 70 line, usually at some point, price will need to come in, surely from being overbought, needing some profit taking, needing a rest. Now, that did happen for the next couple of days. This week, the RSI fell, price fell, and RSI fell. Now today, price has come back up on the SPY because of these incredible earnings from the big tech companies I just mentioned. But here's the big question. Can this wonderful news hold into the week? Now, the GDP came out at a pretty nice rate here at about 3%. It looks like it's going to be, so that's pretty good. Can we keep up this big move in the market where we've gotten all-time new highs for so long now? We just don't know how to act any other way. We have that expectation now. However, the market, remember, the capital markets of industrialized nations move in cycles. It feels like this can go up forever. Goodness knows I wish it would. But we have to know and be realistic that markets move in cycles. This one's getting a little overstretched. It's been going up basically since March of 2009 with the exception of 2011 and 2012 where there were some hiccups, a little bit at the beginning of 2016. But we've had a heck of a run here, so we want to be wise. So we want to see here if in case this exhaustion gap up here, which is so far played out to a slight move down here, will that be a sign here that the S&P needs to rest a little bit, or hey, can we turn right around and start moving higher into the end of the year? Right now, again, the RSI has dropped down below its oversold area, but today is popping back up. Looks like it wants to come back into it. The MACD, however, the moving average convergence divergence oscillator, the MACD line is the black line, the red line is the signal line, and you probably can't see it on here, but the red line has dipped ever so slightly below the MACD line. Very, very slight negative. So far today we have very low volume. I think a lot of people were waiting to see what happened with those big earnings last night, and then waiting to see what they'll do into the coming week. So keep an eye on the SPY. I told you a couple of weeks ago that I was raising cash. I'm still doing so because when we do get a pullback, when we do get a retracement, and we should see one before the end of the year, you want to have some powder dry or some cash in hand in order to be able to take advantage of some really new sweet opportunities. Okay, our next chart today is a chart of the PowerShares QQQ, and I thought you might want to see this. Of course, this is powered by the big tech stocks we talked about, the biggest components in the PowerShares QQQ, which is the top 100 non-financial stocks, follows the NASDAQ 100. The QQQs, of course, and we expected it after we saw earnings last night, popped up today, and when I captured this chart, it was trading at $150 and change. Now, of course, being at all-time highs again today, it is trading above its 20-day moving average, which is coming in at $147.80. Its 50-day moving average, which is coming in at $145.72. We have a trend line here, a pretty decent trend line lengthwise, which is coming in. It's hit 3 pivots, so it's a key trend line here, major trend line. It's coming in right above 144, say 144.30 or 40. So that could provide potential support. We also have support here at 142, down a little more at 140, and down here at about 136. So a lot of potential support here. And, you know, who knows, maybe, just maybe, the Qs can continue higher into the coming week. That would be a Herculean effort, but we've had a Herculean effort so far all along. We will see. Let us not fall into the trap of getting too complacent. Let us not fall into the trap of saying, well, this market's gone up this long, it's going to go up for another 2 or 3 or 4 years. Maybe, but I still think that we will have a retracement, maybe a gentle one, but a retracement maybe of 2 to 5% before the year ends. So just be careful here buying at all-time highs. Okay, our final chart for the day is the Consumer Discretionary Select Sector SPDR Exchange Traded Fund. I thought you all might want to look at that. The symbol is the XLY. Top components in the XLY are Amazon, Home Depot, Disney, and McDonald's. It had an all-time high here, back here, all-time closing high, I want to say, at June 2nd of 92.24. Since then, it was moving higher, then it broke down below the 50-day moving average, popped back up, made what could have been described as a double top, because it actually did break this pivot here. if it comes all the way down and breaks this pivot, a double top, which looks like an M, can be a top reversal pattern. In this case, it did not follow through. It broke below this, we'll call it the center of the M or the pivot of the M, came down here but then rallied, and that's sweet. Whenever that happens and it doesn't continue to fall lower as it would if the double top were strong, then that means whatever asset you're looking at is truly strong if it can break back above and move back up into this prior resistance. So in September, after Hurricane Irma and Hurricane Harvey, it moved back up, nudging back up into and absorbing supply from prior resistance. So now it moved back up into that by the end of September, first part of October, fell back down to near the 20-day moving average, a teeny bit below it, and then of course today has popped up, and it makes sense that it would rally again when you heard the top components that are in it that are all doing really, really well. As I said, Amazon, Home Depot, Disney, McDonald's. Disney is lagging a little bit there, but the other ones are doing well, and I suspect Disney will move higher at some point. Now, so now when I captured this today, it was trading at $91.81. As you can see, it's gapped up from yesterday, came back down, filled a lot of that gap, and now is bouncing off the 20-day moving average. If the XLY can continue to climb higher in this coming week, if it can move up above this prior resistance, which is where it is at right now, if it can remain good here and above the green line, the 50-day moving average, which is now coming in at $90.10. If the market starts higher next week, I may look to nibble, and by nibble I mean very small share size. When I say nibble, if I were going to buy 500 shares of an ETF, I would buy 200 or 300 shares, and then wait to see if it's a successful trade, and if it is, add more when it moves over prior resistance. In this case, if I buy just a few shares, if the market's still strong next week, and then if the XLY moves up and above those prior highs at 92.24, then I would add more shares to it on that breakout when it moves, when and if it moves into blue sky territory above the all-time highs. But I'm going to nibble because we are at all-time highs. Initially, nibble were at all-time highs, and I don't trust the market 100% here to have the strength to keep moving into yet new highs quite yet. So we will see. We will see. Of course, my stop is always a close below the 50-day moving average, means I exit the trade. And if the stock pops back up and starts moving again, I'll buy it back. But I have to have discipline, in order that I don't take a loss, or certainly a large loss. That's always the first thing in the front of my mind. Okay, now let's go on to next week's economic reports. But first, please join us this coming Monday, October 30th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll show you stocks and ETFs that may become ripe for high potential trades. The Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. We've been doing Toni's Market Club here. It will be 9 years in March, and some of our members are the original members who joined 9 years ago, so we're pretty proud of that. Please join us. I think you'll like it. For those who cannot attend our live session, it's not a problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonismarketclub.com. For economic reports, and we still have a lot more earnings in the coming week. For economic reports, on Monday we have PCE prices. Tuesday we have the Chicago PMI and consumer confidence. Wednesday, we have the ADP employment change, the ISM, or Institute of Supply Management report, auto and truck sales, our usual crude inventories, and Wednesday afternoon, we're going to have the all-important FOMC rate decision. Hasn't been talked about much because most people think that the Fed will raise rates in the December meeting. Okay, on Thursday we have our usual jobless claims and natural gas inventories. On Friday we have ISM services, the monthly jobs numbers that come along with the unemployment rate, which is always highly watched. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, happy Halloween. Keep green on your screen. Stay safe. I'm Toni Turner, and this is The Market Now.